All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off with the S&P 500, you can see we had a pretty strong month of October, obviously well off the lows now. If we take a look at the monthly time frame here on the SPX, you can see we have a ridiculously bullish close here. So we had this engulfing reversal last month, and we just took that out with ease. So market's now getting kind of back into a stretched position. Starting to look parabolic again. If you look at names like Tesla, for instance, it's getting a little parabolic to say the least here. This is a ridiculous monthly candle on Tesla, and every time Tesla's gone parabolic, it's had to do some backing and filling in order to advance forward. We see this parabolic move here. We got parabolic here, then came back in before the monthly close and it chopped around. Same thing here in the last couple of times, but Tesla is just getting ridiculous. The FOMO is getting pretty intense here on some of these names, but S&P 500 obviously having a good October. Now, take a look at this trend line. You guys remember I had this trend line on here for quite some time, and once we broke that, I said we're into correction mode. We got into correction mode, and now look at right where we are. So this is where we're stalling out right now, and we're kind of just back testing this area and just kind of grinding up on this old trend line here. So interesting how the charts work. We did get through earnings season, so now the bulk of earnings is out of the way. Amazon, Apple recently reported. So Amazon and Apple both gapped down, but ultimately finished close to the green. As you know, I guess you could say the dip was bought to an extent. I still do like this longer term chart here of Amazon. It is starting to get more reasonable. The 20 moving average is sloping up here. And if you remember a few months back, I pointed out how much I liked Netflix out of the FANG names. And that was the laggard that everybody hated at the time. But back in June and July, this was starting to look good. You had nice consolidation and the 20 moving average up sloping. And that's why you're seeing Netflix power ahead right now. And I think Amazon possibly could be set up to do the same. But, this market is getting a little overextended right now. So, it's tough to really make that call here. Earnings was a little mixed too. Visa, for instance, got absolutely hammered, so this thing is coming down back to the 210 handle. MasterCard as well. You names like Texas Instruments, Facebook, Snap, Intel. A lot of names did get hit, but then we had other names like UPS and so on that did very well on earnings. Microsoft had a nice response to earnings. That's at all-time highs now. So a little bit of a mixed bag, but now that earnings season is out of the way, we'll get some of that volatility out of the picture and the market can settle, and we'll get a better idea of what's going on moving forward. By the way, I did read that there is included in the spending bill, there is I'm not sure if it's true, I have to verify this, but there's some type of hike in stock buyback tax. So that could be very interesting moving forward. And the market did really just ignored that for now, but something to keep an eye on there. But right now, bottom line is market's holding up. The trend is up, and we could see some turbulence. I am expecting a little bit of turbulence in November, but we'll see how deep of a cut that ends up being. I still think volatility, I talked about this earlier in the week, volatility should get up to the 18 handle. We did that Friday morning, and we pulled right back. And I still think we're going lower. And once we do, get to a certain area where I think there's too many bulls in the market, we'll take volatility for a long. But we're not quite there yet. And by the way, speaking of bulls versus bears, there was a lot of bears right here just a month ago. And look at how quickly sentiment changes. I mean, it's pretty much, we're borderline all bullish right now, sentiment-wise. But, very, very, very interesting stuff. And we got to respect the market right now. It's up, and if that's where it wants to go, that's what we have to do with it. But anyway, so let's move on here to crude. So Chevron CFO did say in an interview the other day that he does not expect higher oil prices to be sustained, or at least not a bullish super cycle, as he put it. So that is an interesting comments coming out of him. But again, crude hitting that 85 area, I told you it would probably get up there and then stall out. And that's exactly what happened. We had a little bit of a pullback this week, nothing major. And we're still holding that 20 moving average. Doesn't mean it can't, pull back a little bit more and maybe get down to 72. You have a pivot high here at 77, or not 72, 78, and 77. Maybe could retrace to the 50 moving average, which is upsloping. But again, I keep saying it. The real upside target here for me is 90 bucks. So you have this broadening pattern and you have this pivot low. This is where you broke down from. It's very common for equities to retrace those breakdown areas, and crude is getting, I mean, it's just gone straight up. So that's going to be a tough resistance level for it if it doesn't do any backing and filling before that. But yeah, really nothing's changed on crude so far. It's still just trending higher, and the resistance levels are working out so far. Let's move on to nat gas. So natty getting up to 650 about a month ago, and it's chopped around since then. Again, I told you it's going to have to do some backing and filling if it wants to challenge this again. But really nothing new to report here, just kind of chopping around. I expect it to continue to do that for the time being. If it's going to continue to push through that 650 area, it's going to need to do some consolidation, in my opinion. But really nothing too new to report on nat gas there. So let's take a look at the dollar index. Dollar having an interesting week. So we started off, flattish, and then we sold off hard on Thursday. And, a lot of, dollar bears got excited. And then, really I just said, look at the yellow line here on the weekly. That was your inside bar low. And we did not take that out. And we would have had to have closed below that on Friday for that to be officially taken out, which we didn't even do. We reversed higher and the dollar really ripped there. This is one of the reasons why I think November could potentially be a bit of a turbulent month for the market here, as the dollar is kind of like the sleeping elephant in the room. And, with the S&P so stretched right now, it is getting a little overbought on pretty much all time frames. And if the dollar starts to push higher, that's going to put pressure on the equity markets. So I'm not exactly going out on a limb saying that, but if that does happen, you can expect a pullback in the equity markets there. So let's take a look at the metals. I want to talk about copper a little bit here. Copper broke out of this channel here. So we had this yellow channel here that I've talked about for a while. We pushed through that, got up to about 4.8. Nice 3-bar surge, and now we're pulling back. So we had possibly a failed bullish pattern here on the daily time frame, but on the weekly, we're still inside of this wide range green bar, and the trend is still up. So copper's still holding up. Copper is an interesting chart. We have a little bit of a bearish look on the daily, but the weekly is actually holding up okay. It is a bit of a steep pullback. Now, I will say if you close below this low here, so that would be at 425, we'll call it. If we close below that on a weekly basis, copper is probably headed down to $4. But in the meantime, this can still chop inside of this green bar and be bullish. So just keep that in mind. A little bit of an interesting dynamic there going on in copper. So let's look at gold. Gold having a bit of a flattish kind of week. Did sell off a little bit on Friday. It's still struggling with that 1810, 1815 area that we've been talking about for a few weeks. But ultimately, the weekly is not terrible. So you're just still inside of last week. And if you can continue to consolidate, you can take out those sellers and accumulate shares or contracts, however you want to call it. And we could attack these highs. So the first test again is 1811 on a weekly close. And then the next weekly close would be about 1834. So if we can get above those areas, gold goes significantly higher over the next couple of weeks to months. And then silver, same kind of deal. I like the pattern here on silver a little bit better. I would like to see it pull back just a little bit more. But in any case, if it just, basically what we're looking at here is time. So you're looking at August 9th to about September 15th, September 16th. So there's about a month of consolidation before you broke down. Whereas here we're at October 20th, and we're only basically a week from there. So I would like to see a little bit more chop before silver tries to make an advance, but it can definitely do that if it consolidates a little bit further. And moving on to platinum, same kind of deal. A little bit more chop is needed, but this is a nice pattern on platinum. Got a nice little uptrend. You could even make a case there's a little bit of a trend line here. It's a bit of a steep trend line, but it could, platinum could get a pop off of that. So keep that on the radar. And palladium, which has been a little bit weaker here, had a decent week though. Let's see. You could actually make a case that you got a bit of a bullish kind of flaggish pattern here on palladium off of the lows. It is a bit of a steep pullback, but if it breaks through that, it could probably go up and challenge that 2300 handle. So all the metals looking okay right now, especially the PMs. Copper is a little bit more mixed, but the precious metals looking all right. The only thing that did get hit a little bit was GDX, GDXJ. SILJ. The miners did take a little bit of a hit. The silver miners look a little bit better than the gold miners currently. But yeah, I do not like that hit that we took on Friday on the GDX. So I would like to see a nice rebound over the next week or so on that. All right, and then let's quickly cover yields. So I told you yields would pull back here. That is exactly what happened. Just hitting that trend line. Take a look here. So this is the trend line we're looking at. It's also an inverse head and shoulders or a potential cup and handle. And your pullback area will be about 1.4. You have the 20 and the 50 up sloping on the weekly. And on the daily, you've got this convergence of really the three heavier moving averages, 50, 200, and 100, converging around 1.4. So that is where your short-term area would be for a bounce on yields. And then let's quickly cover uranium, since everybody likes to talk about uranium lately. So uranium pulling back again. This is CCJ here. We talked about this is going to be a bit of a tough task to get through this pivot without, we had a little of a pullback here and then we just had a sharp move up. I think it needs to do more backing and filling, and we did take a hit on Friday. So, no surprise to see a little bit of a pullback there in uranium. URA, kind of same kind of deal. URNM as well. I think they just need to do a little bit more chop to get through that pivot. And outside of that, nothing really too new to report on uranium. But anyways, guys, I'm going to wrap it up here. Thank you guys for watching. Come check me out on Twitter, Patreon, YouTube. And thanks for watching Jason's channel. Leave it a like and a thumbs up and a comment. But anyways, guys, take care, and I will talk to you next week.